Okay, we're going to go ahead and get started. Welcome those of you who are in the room now. I know that we're expecting a couple more folks to join us. And we're really excited to welcome the Gold and Silver Club with us today. And my name is Dave Osmond, and this is part of our education series here at MetaStock, so we're really excited to do this. I got my starting in investing with silver, and so it's something that's close to my heart. I'm excited to welcome Nick and Phil. Before we start, folks, if you'll bear with me, before every webinar presentation, of course, we have a disclaimer that we need to put up here for you. So I'm going to go ahead and put that on the screen, and then I'm just going to read that down for you. Okay. Today, this demonstration is designed to instruct you in using MetaStock software and accompanying plugins. It's not a recommendation to buy or sell exchange-traded instruments, but rather guidelines to interpreting and using specific indicators and features within the software. The information, the software, the techniques presented should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Thank you. I appreciate that. And what I'll do now is I'll go ahead and turn the time over to you, Phil. Go ahead and take it away.
Hi everybody, yep, thanks very much for that introduction, Dave, appreciate it. Okay everybody, welcome to this evening's webinar, How to Catch Big Moves Fast on Gold and Silver with QuoteCenter. So it's actually perfect timing. What a day we've had today with gold getting to 11-month highs, the highest point in 2012 so far. So we're going to be talking about that today as well. Okay, so first of all, the live session today, we are going to cover, first of all, how to trade gold and silver breakouts with QuoteCenter, the key news announcements that drive gold and silver prices, proven techniques for identifying big moves and getting into trades at the most profitable entry points, top trades of the month using price action with QuoteCenter, the week ahead, so key events looking forward, and some Q&A. The reason why we trade commodities is essentially gold, silver and oil have made us the most money in the fastest time. Now you can make money regardless of whether the price of commodities moves up, down or sideways, and it's easy to make consistent income every month following a simple strategy. You can compound the interest and grow a small investment into a substantial return on investment, and it's not location dependent, so you can make money at any time from anywhere in the world that suits you. So I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the biggest financial markets in the world, Forex, gold, silver and oil. I've trained hundreds of individuals to become independent traders, successfully manage their own investment portfolio, and I'm also responsible for the research and development of the Gold and Silver Club's trademark strategies that have a proven track record of generating returns for traders. Also regularly contribute to a number of financial publications and speak at numerous trading seminars and workshops, sharing expert knowledge with investors who have a similar passion for trading. And this is Nik Kalsi, who will be joining us shortly. He's a professional trader, investor and speaker. Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. Nik is the co-founder of the Gold and Silver Club. He spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. And it's through his first-hand relationships with some of the world's most successful traders that Nik discovered the formula, mindset and tools that give any individual the definitive edge to make money in any economy. And he also regularly writes for a number of global business and financial publications and appears frequently on television. So with myself and Nik presenting tonight, you're certainly in good hands. So this is just a few examples of some recent press we've done recently. That's the Arabian, the South African and International Life, just to give you some publications we've done in the last couple of months. Here is a few of our recent seminars, workshops and seminars there. Okay, so that's a little bit about us, and now on to the important topic of the evening. We're going to try and make it a little bit interactive this evening. So can you tell us, believe there's a chat function there. Yep, if you can let us know, guys, have a look at your computers or just have a guess what the gold price is right now. So if you should be able to speak in the little chat section there. Wow, Craig Peters, bang on. Fantastic. Okay, so we've obviously got some very savvy traders on the call this evening. That's fantastic. Ramesh, 1800 close. We got close to 1800 today, but Craig, you've taken it away. That's great. So the gold spot price right now is $1,790 per ounce. It's actually an increase of 9.12% in the last 30 days alone. So there's been some huge moves in gold recently. And today, actually, gold shot up 1% to its highest price in 11 months. So the market is definitely eyeing up $1,800 per ounce at the moment. If you want to know why that was, it was the market was boosted earlier on today by signs that the European Central Bank intends to keep borrowing costs low. So we had both commodities and equities rose and the dollar fell against the euro today after the ECB said everything was in place for the bank to buy the bonds of troubled Eurozone countries such as Spain, and they kept refinancing rate steady at 0.75%, so a record low to stimulate economic growth. And we saw the prices fare very well today for both gold, silver and crude oil actually. And that's all actually off QuoteCenter, so we'll be going over that very shortly. Okay, and silver. So silver in the last 30 days, so if you thought gold was impressive, silver has moved 21.42% gain in the last 30 days alone. So some huge gains on silver. So we'll be going through those. And of course, whilst gold and silver are getting to highs of 2012 and they're peaking as they are at the moment, you really do want to learn how to trade breakouts. So it's important to understand how to be able to trade markets when they're breaking out to the upside. We had this can be applied to other markets as well. We're going to focus on gold and silver today, but breakouts can be some of the most profitable trading opportunities available. So how to trade gold and silver breakouts. Making money from breakouts. So you'll increase your trading profits if you can accurately identify levels of support and resistance. So areas where prices may stop and turn around in the future or break out from. So typically one of two things will happen when the price approaches a resistance level. One, the price will hit that level and it will reverse. And two, if the price breaks through a resistance level, you can expect a high momentum move to continue. So understanding resistance and perhaps what is resistance. If you've not come across the term of resistance before, no, there's quite a lot of advanced traders on the call today, but if you've not come across it before, resistance is a level where buyers find sellers. So it's a ceiling in price. So you've got a little example there. So you've got support and resistance. So the resistance is the ceiling and the support is the floor. And you'll typically see a price often. You'll have various stages of resistance and support in any market. It's a very basic yet effective form of technical analysis. We're going to add price action to that, and we're going to add also QuoteCenter trading off live news feeds as well. And this really all we put that everything together, and it's very profitable for your trading. So most traders acknowledge these levels, and really the bigger the time frame, the more important the potential resistance level. So the bigger the time frame, for example, on gold at the moment, a lot of people are very interested to see if we do get back up to the high of 2011 of 1,920 thereabouts on gold. If we get a breakout, that is a very strong area for us to be testing. It's an all-time high, so we could in theory get to 2000 and beyond fairly quickly. So the bigger the time frame, the more important the potential resistance level. And we've by the way, it's a reason it's a resistance level. It's been tested twice before, 1920 last year, and we weren't able to break through it. Okay, so why breakouts? At some point, there will be a fundamental shift in the market that will simply trigger the price action to burst out of the resistance level and trading range. So at some point, a market will stay range bound. A lot of markets do actually stay range bound for about 40 to 50% of the time. They actually stay range bound until they break out either to the upside or we have a sell off to the downside. Okay, so some very important news. I mean, certainly throughout the summer months, August, September, and now we're into October, some of the most dominating factors which have meant we've had breakouts to the upside on gold and silver, and we've reached over 10% in gold in the last 30 days and over 21% in silver, have been news announcements. Obviously, the Federal Reserve announcements. So we'll go through these one by one. So first of all, US non-farm payroll. And this is important actually because US non-farm payroll is actually tomorrow at 1:30. So you can expect more volatility tomorrow at 1:30, especially with gold and silver so high to their, well, gold especially, it's at 2012 highs and silver is at 7-month high at the moment. So are we going to get breakouts? We shall see. So the level of employment, US non-farm payroll, is the level of employment in the country, in America actually, and it indicates the overall strength in their respective economy. So it can move the market substantially. What you'll tend to find on US non-farm payroll is if the market is showing that more jobs have been created, this creates a stronger US dollar. The US dollar index will rise, and you'll consequently tend to get gold and silver will go down as a result because they are priced in dollars. Now, if the jobless claims, if less jobs have been created and more people are unemployed, which has happened in the most recent months, you will find that the dollar goes down and commodities will go up. And we'll show you some examples of that, and they tend to not just go up slowly, they will rocket on the news. So this is where if you have something, a tool like QuoteCenter with live news feeds can be very powerful. So obviously interest rates as well is very important. The interest rates set by central banks exert an enormous influence. So you'll get all of these. These are part of an economic calendar that you want to keep an eye on when you are trading major news for commodities, especially breakouts. Inflation, so inflation numbers like CPI, PPI show the level of inflation in a country. Again, numbers you want to be looking at. Federal intervention. So this is the FOM. Both two things really cause the markets on the Federal Reserve to really have an impact. So those are when Ben Bernanke speaks, and also when we have FOMC minutes. So both of those events cause significant moves in the prices of gold and silver. And more recently, especially before really QE3, and QE3 was on September the 13th, before then, the FOMC announcements, the two previous to that, both caused big moves to the upside on gold and silver as well, because there was hinting that they would be doing some sort of stimulus. Then came September the 13th, and we did see a rally as well when QE3 was announced. We'll go into that a little bit more detail shortly. And then we have the Eurozone. So the growing debt situation in Europe has had significant impact on currency prices. The euro absolutely rallied today. Pound dollar absolutely rallied today off the back of the ECB saying that they're going to be refinancing a rate that they're going to keep the main refinancing rate steady at 0.75% to a record low to stimulate the economy. And this just rocketed the euro. So essentially what that means is that they, for the time being, they're going to buy the bonds of troubled Eurozone countries such as Spain. So it does reduce the possible negative impact of something really bad happening there by them doing that within Europe. So we saw the markets just rally today. So very important to be keeping an eye on this sort of news. So first of all, what we want to look at is the breakouts on gold, silver and oil during the month of August and September this year. Okay, so here we have it. So this is gold and silver at 4-month highs. This is after they went sideways for 3 months during the summer months. So the summer doldrums they're referred to often with the metals. We didn't get much movement. The price of gold stayed between 1520 to 1640 for pretty much 3 whole months. And eventually, we suddenly got a breakout towards the end of August. Remember it very well. The third week of August, gold and silver at 4-month highs on hinting of additional monetary stimulus from the FOMC minutes. So this was for us based in the UK. It was an announcement which happened at 7 o'clock in the evening, thereabouts, and it had a big impact on commodities and currencies. So that's the move that we had. We also do follow the commodity currencies, so we look at New Zealand US dollar and Australian US dollar, which are quite tightly linked to the price of gold. Primarily because they are big exporters, so they tend to be linked to the commodity. So if you see the price of gold and silver rallying, you'll often see the price of Australian US dollar rallying as well, and New Zealand US dollar, and likewise if the price is falling. Sometimes you'll even get more of an exaggerated move on those currency pairs, and you can take more advantage of that. So here we have it. Finally, silver is breaking out. And we're going to show you examples of QuoteCenter very shortly. I'm just showing you some technicals at the moment. So silver, this was a breakout we had on silver after the FOMC. So we had been hitting up against this resistance of 28.75, which happened to be a Fibonacci level as well. We've been hitting up against that, or not been able to get past it for 3 months, until finally the 22nd of August, we broke past that level in style on the news. And what did we see? We actually hit our profit target within 3 trading sessions, 3 days, of $30.46. So we rallied 171 points, and there you'll see we had the next price level there, Fibonacci level up, which we were targeting. And you see we broke out from that level of $28.75 and completed the whole move for 171 points. Same situation with gold. So whenever silver is breaking out or gold is breaking out, you'll tend to see a similar move in the other precious metal. So with silver it broke out, and then we had gold breaking out. So gold finally broke out of the $1,640 resistance level in August, and the momentum actually took it right up past another Fibonacci level of 1656, and in fact within 3 trading sessions we broke out. So this was another breakout trade, and we broke out to the upside, and we've hit $1,676 per ounce. And nominal, very small, there's a huge risk to reward on these, so we've got a very small risk on these trades and a maximum reward because of the volatility and the explosive nature of these sort of trades, especially based off news by in this case the Federal Reserve. And we've been waiting for that. You can see we've been hitting our head against that $1,640 level a number of times on over 3 occasions there before we finally broke out. So in that scenario we were ready to take advantage. And bringing us closer, so this is breaking news in September. So this was when the Federal Reserve announced QE3. So essentially gold and silver rocketed on Thursday 13th of September as the US Federal Reserve announced QE3, committing to purchase $40 billion in mortgage-backed securities per month, every month, with no end in sight at the moment. So this is effectively QE to infinity. So this move, you can see the huge move, and you can imagine having this sort of news instantly, how well you can position yourself for a trade. So here we actually had price action as well. So you can see we got in the breaks off Fibonacci levels. We got straight into those based on the news. We had the news coming out instantly in the same way as institutional traders do, because QuoteCenter allows you to have access to that sort of information. And in less than 3 hours, gold increased from $1,717 per ounce to $1,771. So it was a 3.14% move in one day, and silver increased by $32.71 to $34.77. So that was a 6.5% increase in just one single day. So you can imagine having that news immediately when it broke out was very important in order to really maximize and have a very profitable trade. So here was gold and silver's initial reaction. So here we can see, so if you are looking to get into this trade, you can obviously see on the screen there, this is where the yellow lines going across the screen there. We've got some pivots as well, but we were looking at the break of a Fibonacci level there based on the news. So this was just as the news was breaking. So this is where we were entering the trades. We see QE3 is being announced. You see the move down just at the bottom there on gold as well. It came down, got to an entry level that we were looking to get in at, and then it fired to the upside on the news as well. And here's what happened next. So you can see our entry points and how much that moved. So this was very much a real time, you can imagine, trading, taking screenshots whilst this was happening was a lot. But yeah, we got in on those trades, and there we had a fantastic move. So this was the gold breakout, and we reached our take profit target that day. So we got to the price action level just to the upside. That was a Fibonacci level as well. And you can see where we just touched it, and traders are actually starting to take profit at that level. And here again on silver with pretty much pinpoint accuracy there, so 34.85 or thereabouts. You can see that was it. That's what a lot of traders were looking at as a level to take profit from on silver. So we caught the entire move, and then actually the price started to decline, consolidate around that level, and we've consolidated more or less from there ever since in the last 2 to 3 weeks now. But we haven't gone back down. We've held those prices. So silver has really held above 34, above that sort of level, and we've tested 35 a few times. So really the next level on silver at the moment that we need to get above is going to be 35 and around about 40 cents. That's really the level we need to start breaking above for the next breakout, which will probably, I would imagine, occur on some significant news as well. And on gold as well, gold is currently, well, we tested all-time 2012 highs today. We got up to 1,595. A lot of anticipation for 1,800 to be hit. I can imagine if we do get to that level, there will be a lot of traders starting to get very interested if they're not already in gold, because then we're only just over $100 away from the all-time high. And actually gold at the moment, priced in euros and priced in the Swiss franc, is at all-time highs at the moment. So gold price in dollars is just lagging slightly behind. Okay, so this is where we put it all together. So the power of QuoteCenter for taking advantage of these sort of trades. Okay, so why QuoteCenter? Well, you get accurate news and analysis on which direction the market is moving in real time. So we get the news coming out exactly when the news breaks. So you can get into trades at the best entry prices. You receive the exact same data at the exact same time as institutional traders do. You never miss a profitable trading opportunity. And it's the most powerful real-time tool for news trading. So here is the QuoteCenter custom design for the Gold and Silver Club. So guys, we've had a few, just quickly, we've got a few questions that we're going to come back to towards the end. So we will address all of those questions, guys. Please keep them coming. Thank you for the questions. We'll do a Q&A session at the end. And QuoteCenter, so this is actually what our bespoke template looks like. So we've got a gold and silver club template. So let me actually it gives you, we're able to trade gold, silver and oil with real-time news and market analysis and prices. So let me show you today's actually. So this was today's, we've got our news feed on the bottom left hand side there. So here you can see this is where the news is coming out on the bottom left hand side there. And this is real-time news coming out. So we had there with the 11-month high after the ECB meeting came out. And we've got on the right-hand side there, we've got our chart. So we're looking at gold, silver, oil, and we've also got the US dollar index there as well. You can actually see the live prices there. So we've got gold, silver, Brent oil. We've got the US dollar index there. And we've also got the pound dollar as well. So you can see, in fact, that gold gives you the percentages there. So at this point, at the time of the evening, it was up 0.87%. Silver was up 1.114% for the day, and crude oil up 3.20%. So these are oil in real time, captured just a little bit earlier today. So we've got everything we need there. So we've got our charting that we are are trading off. As you saw earlier, we've got our news feeds coming through, we've got our indicators which we are using. So this is really everything you could want to be able to trade off the news. Okay, so here we go. So this was a little bit earlier today, so you can see the news is coming through. This is our live feed as the news is coming through. Here we had precious gold hits 11-month high after ECB, $1,800 an ounce in sight. So this is literally as it happens, so right now, and this was the news coming through, and you can quickly click on the tab or the link there, and it brings up the news. So then you can have a further look, you can read the story. So that's the story. I was just reading some details to you earlier on, so you'd be very clued up as to exactly what's going on in real time, which is very important, so you can react very quickly off the news, and as well as using your trading strategy. So here we had the news coming out, and earlier on today we had gold spike. This is when the gold spiked to 2012 highs of $1,795. So there is a spike there, and you can actually see. We'll show you some trade setups, some trades of the month that we've had in September. But you can see there where the price is spiking up. We actually had yesterday or the day before we had a pullback in price. It came back again, retested this $1,770 Fibonacci level, and then we've rallied back up again. So you can see previous resistance is now becoming support, and we're breaking out, and we're still actually remaining above around about 1790 now. So we had a breakout earlier. The price hasn't come all the way down and retraced. We're still just sitting right at $1,790 now. So very interested to see what the Asian Pacific Asia session is going to do this evening, whether we're going to see 1800 by the morning over here in London, or we're going to see what non-farm payroll does to the price there on gold. So great timing for this webinar. So here again, we just got this is an example of the live news feeds as they're coming through there. And again, you can just click on, there's a function there, you can look at front page, so you can get all of the news. You can actually configure this so you're only getting data which relates to the markets you're looking at. So we're most interested at this present time looking at gold, silver, the commodity currencies as well, crude oil, and we are getting only news which really on the news feed, which is specific to the markets we're looking at. So you can refine that and look at only the markets you're interested in. As soon as you see a headline come out you want to look at, you click on it and it brings up the whole headline, as in the example that we've got just there. Okay, so the importance of news for your trading. So it's not really just enough to know the technical analysis when you trade. Obviously, that's a great place to start, but a lot of newbie and even some advanced traders do get caught out if they're not savvy about the news, if they don't know when major news is coming out. It is just as important to know what makes the market move. So imagine you knew exactly which direction the market was moving literally seconds after a key announcement or why it was moving. A headline story has just been released. So you can use that knowledge to profit regardless of whether the market was about to move up or down. So really, timing is everything. It can help you a lot, especially with breakouts. Okay, so we're just going to look at some top trades of the month. So using price action on QuoteCenter. So this was actually using price action and QuoteCenter on both sides of the market. So as well as breakouts, also trading off support levels or even trading breaks of price action levels. So here this was crude oil. This was last week. Here we had the price actually come down and retest a supportive level, and it was $108.43. This was the price that we actually came down to last week, and then our exit was $112.23, which was a perfect price action move. So the crude oil bounced off 108.43 level with pinpoint accuracy, so 380 pips there for some of you who are also trading in lots as we do. So at one lot that was equivalent to 3,800 profit within 24 hours. And that was based off a crude oil trade last week. On gold last week, so we had a pullback in gold as well last week, and actually came down and retested that $1,740 per ounce level, and was a nice profitable, nice entry point. It was a previous resistance level. It was a level that gold previously struggled to get through, now has become support. It was a pivot level for us to be looking at. And we got in off that trade at 1,740. You can see our exit there, so you can see the risk on there as well. So just quickly, we're not here to talk you through. We're not here to give you a strategy, and we can't give you any tips. I'm just going to talk to you about risk and reward though. So on all of your trades, you always want, the way we trade anyway, your reward to be more than your risk. So in this example here, I mean, obviously, let me go back to the previous example. So crude oil, the risk on that, by getting a bounce just off $108.43, and it was a very clear bounce, could be very tight, and we had a huge move to the upside, a 380 point move to the upside. In fact, even a 10-point stop loss on that, so a risk of one lot, that would have been £100, would have kept you in that trade for a maximum profit of 3,800. That's where we were looking to take profit on that trade, because we want to be in and out, and that was in and out within 24 hours. Similar situation on gold. So on gold here, we had a 2-to-1 ratio. So what we were risking in this scenario, we were looking to make over 30. Well, actually, we made 28 points and our risk was 14. So that was a 2-to-1 ratio. Not as good as oil, but it was still a good ratio. You never want to be underneath a 1-to-1 ratio. You don't ever want to be risking more on a trade than you're willing to make on a trade. So here we have an example, New Zealand US dollar. Again, we actually came back, we retested a price action level that we were looking at. We broke through it ever so slightly. Stop loss kept us into the trade, and then we rallied up at 67 points. So at one lot, that was the equivalent of, it depends entirely of how many lots and you're going to be trading at, but that was equivalent of $670 profit there in just during an afternoon session. Here's an example on pound dollar. Again, this was a breakout. So this was a breakout on the 20th of September. So this was a breakout trade where you can actually see where the price is broken out and rallied off news. So our entry point is there, exit point. So that was a profit of 129 points. So that was, again, just looking in terms of lots when you're trading, that's the profit, $1,290 trading on just one lot for that example. And actually, this is today, and this is a great example because commodity currencies, they move, as I said, in tandem with gold and silver. However, US dollar, Canadian dollar moves the opposite direction to gold and silver. So if gold and silver are rallying, you're going to see US dollar, Canadian dollar falling. And we actually had a perfect setup on this yesterday evening. We were talking to our traders about this, and you can see the tiny risk that we took. So we came up, we tested a resistance level, also happened to be a Fibonacci level. So obviously a lot of traders were looking at this level. We only needed a 5-point stop loss on this trade, highlighted in the blue there. And actually worked in our favour, so the price started to fall down, and by the morning it had already fallen down. It was about 25 points or pips in our favour, and then by the afternoon we saw the news announcements come out we started to move our stop loss to take some profits, but the news that came out in the afternoon via QuoteCenter was in our favour. We saw gold and silver start to rally more, and this is when USD Canadian dollar really started to tank and go down, and we reached our profit target highlighted in blue there. So we got to our 58 pips sort of target. So again, depending on your pound or dollar per point there, just trading at one lot was the equivalent of 580 in just less than 24 hours really on that trade, from a risk, if you're trading one lot there, of $50 or £50. So it was incredible risk to reward on that one. We often have several positions open at the same time, so it entirely depends on the size of your portfolio, what sort of pound per point and so on you want to be going in at. But that's just an example of trading one lot there. Okay, so that's really quite a few examples there of trading breakouts. Some of the trades of the last month, and that was a trade just taken today as well. What we're interested in now, obviously, you're interested to find out, okay, so the week ahead, what's going to happen in the week ahead. So key events looking forward. First of all, tomorrow, 1:30 p.m, US unemployment data release, possibly the most important of the events below. So this is going to be very important. At 1:30 tomorrow, So if we expect either a strong US dollar to result or a weaker US dollar depending on the data. So this is important because US dollar is correlated to gold and silver. Gold and silver are priced in US dollars. So again, having access to QuoteCenter soon as non-farm payroll is released, having that information come out and streaming through is important. It's also very important to have QuoteCenter in scenarios where there is unexpected news as well. If you're suddenly seeing a move to the upside, you would like to know why. And it's important for these news announcements or even to the downside. If you're savvy to the information which has come out, you can very quickly react to it. If you don't have that information available, you can't always adjust your trades. You may just think it's maybe a blip, or there's just somebody is either buying or selling a lot of that particular market. But having the actual news does give you that edge. So also next Wednesday, the 10th of October, we've got the 8:30 GMT Australian dollar employment change, so that will measure the change in the numbers of people employed. So the job creation is an important indicator of consumer spending. A higher expected this is for those who are trading Australian dollar, US dollar, which correlates to gold and silver. So a higher than expected reading should be taken as bullish for the Australian dollar, while a lower than expected reading will be taken as bearish. We've also got the G7 meeting, so that's attended by finance ministers and central bankers from 7 industrialized nations next week. So that's Canada, Italy, France, Germany, Japan, the UK and the US. So the comments and the statements can also create significant market volatility, so one to watch out for. And also next Thursday is the Canadian dollar trade balance, so that will measure the difference in value between imported and exported goods and services over that reported period. So again, we do look at the US dollar, Canadian dollar, because it is correlated again to the prices of gold and silver inversely, and it's also correlated quite strongly to crude oil or oil in general. So any if it's higher than expected reading should be taken as bullish for Canadian US dollar, while a lower than expected reading should be taken as bearish. Markets aren't always logical, but you still want to be following your strategy and your price action or your technicals. But it's important because the CAD is correlated to gold and silver, but also crude oil. That's why we were interested in that news announcement. And let me just touch upon that quickly actually. Having the news available to you will help you, and it will definitely give you that additional edge. The markets, as some of you may know, are not always logical. So A plus B does not always mean C, because the markets are made up of people, of psychology, and for that reason, a market may not always go the way that you expect it to based on news, which is why we have our price action, why we have our indicators available to us as well. But having the news will give you that additional edge, especially having it real time. Okay, so as we coming on towards the end of the webinar, guys, got some questions there. Thanks very much. We'll go through those very shortly. We want to make you a special offer today. Actually, it's very generous of Dave and MetaStock to offer this. So you actually get a free 30-day trial of QuoteCenter. So exactly all the tools that we discussed this evening. You can start your free 30-day trial here. You can actually get that off the website www.metastock.com/gold and silver 1. So that's a 30-day trial of QuoteCenter. And you can get that set up. So you've got exactly the same setup that we discussed earlier. Okay, so that is the, I'll just let you, if you need to jot that down. Brilliant. And also, as we draw to a close, guys, definitely if you'd like to be kept updated on all the latest news on webinars like this one this evening, subscribe to our newsletter. You will get a weekly update of all the news and the markets and a wrap up as well. If you just go to www.thegoldandsilverclub.com and you go onto the website, you'll see some boxes there where you can subscribe to our newsletter. You can also go into market tools and you'll see there where you can look at the various data and news feeds that we use for trading, and you can see QuoteCenter there and the different setups you've got. So well worth having a look at on the goldandsilverclub.com. I know some of you have expressed interest in the course, so you can see details also about our upcoming workshops which are occurring in October, so you can find details there as well. If you want to email us, it's office@thegoldandsilverclub.com, or if you need to call our office, you can call us on 0207 193 0403. Okay, fantastic. So we just got a couple of questions before we wrap up, guys, and if there are any more questions, please do feel free to post them in the chat there. Okay, so we've got a question from Craig. Why do you think the price broke so far before breaking out after QE3? So why did the price of gold and silver start breaking out to the upside before QE3 was announced? Essentially, this was expectation on QE3, and on previous occasions, you tend to see in the markets buy the rumor and sell the news. So a lot of the time, if there's a rumor that we're going to have QE3, which occurred actually incidentally earlier on in the year, especially towards the end of February for gold and silver, there were a lot of rumors that QE3 was going to be announced. Then when Bernanke did his speech, he at that time said that no QE3 would be initiated, and the market sold off rapidly. We saw gold, the fastest move down in gold ever, actually $100 moved to the downside in just 30 minutes. So that was a huge move down. But since then, or since especially over the summer months in August, September, when we had the FOMC minutes in the Federal Reserve, they did hint that there would be additional tools at their disposal in order to stimulate the economy, and that caused the markets to rally and start to rally pre QE3. Oh, okay. And Craig's also asking as well, so why do the markets move down before going up? I mean, this is all part of, I guess, the volatility you will get sometimes. Sometimes you can get a slight whipsaw movement, which again is why you actually want to have the news, because you will see some traders who they might not have the news available to them. They may see the price temporarily whipsaw to the downside. This is purely a lot of both speculators who believe certain news is going to come out, which is going to be contrary or negative, and on the flip side of that, a lot of traders will hedge themselves or get into trades just before the news, and we often see a whipsaw in price like that. So you want to, just as the news has been released, you want to have obviously your whatever it is you're using, your strategy and your price action there, and then you want to be trading right after the news is broken. You want to be giving that some time for your actual price action or the levels you're looking to get in at to be triggered, and then that's when you'll be getting into the trade. We don't look to get into a trade before the news. You must wait until the news has broken, and then we'll be looking to get in. Otherwise, you can really get chopped about. Okay, fantastic, guys. That is great questions, and that is pretty much drawing to a close today. And we'll just leave quickly the screen up for you guys there for the 30-day trial. Fantastic audience tonight, guys. Thanks very much. Have a great end to the week. Good luck for tomorrow's non-farm payroll announcement, and I will pass you back across to Dave.
Thank you so much, and we are really pleased to have you guys here. I really enjoyed your presentation. I know everybody else did too. Listen, these guys have a really high review. I always hear from people who take their courses that they do a very, very good job. We definitely hope you'll give them a call and check their website. Certainly make sure you've got the QuoteCenter tools that they're using. But they're good friends, and we certainly like what they do. We're really glad to have had him here in our education series today. Thanks to all of you who joined us. We did record the webinar, so we'll get you out a copy of that. We'll email one out to everybody who registered. And have yourselves a terrific evening. Take